Time for Chart Attack, and a pair of charts we hope will make you a little bit smarter. The U.S. economy, better than it seems, says our closer, Jason Schenker. And I tell you what, it's a couple of different ways of looking at GDP. Let's start with real GDP over time.
Sure. You know, what we've got in this chart, this is just real GDP. It's growth without inflation in it. And what we saw is that in 2011, we were already exceeding the peak we saw in 2007. So things look good here. It looks great. But we've asked ourselves, why doesn't the economy feel better? Why aren't we in a happier place right now financially?
Yeah, well, answer that for us. Why don't we? I mean, as I look at that chart, real GDP, in other words, inflation adjusted, it looks like we're setting new highs. We should be creating a lot more jobs and feeling better, right?
Well, yeah, but the truth is we've also had population growth in this time, which is why I want to talk about per capita real GDP. A couple weeks ago, I actually met with the Dallas Fed. These are a couple charts I talked to them about, and they thought this was an interesting sort of topic. It's really only going to be at the end of this year or the beginning of next year where you see real per capita GDP exceed those 2007 levels, right? So while on a non-population adjusted basis, we were above it in 11, if we look at it on a per capita basis, this is the first year where we will be richer on a per capita basis at the end of this year, beginning of next year, than we were at the peak. And that explains why home prices now are going to be back where they were. Equity markets are hitting new highs. Real per capita GDP is hitting new highs as well.
So in other words, we take the total GDP, divide it by the total population, and that's per capita GDP. You think that's
real per capita GDP?
That's the better way to look at it?
I really do. I really think it is, because one of the main key economic drivers in a population, you have a few different things that can add to growth in a country, but if you add more people, you're going to get more growth. So if you need to adjust that.
Well, assuming they're employed and productive.
Well, any people are going to have a multiplier effect. I know we talked about it in earlier segments, but when you have new people, they buy stuff, they consume services, even if they're babies, you're still going to buy stuff for them. They don't contribute to the society, but there's going to be a multiplier effect of buying food, buying services, things for them, et cetera, and that contributes to growth.
Understood. So better than it looks. You know, you start connecting the dots, Trish, and this economy, you can understand why the market's making new highs, right? Maybe it's starting to turn.